Hey guys, and welcome back to another video today for Watch Trading Academy. Now, if you've been following us, you've been hearing about the market crashes, right? But today I want to share a story with you on how I lost $150,000 in one single watch over the last 2 weeks. And I want to talk about that and talk about why that doesn't even matter and how to actually not really care about any of the downfall of certain models and so on, because I'm going to show you a formula on how you can actually avoid ever losing money on a watch and basically use the same strategy that a jeweler uses in order to do that. So let's talk about my watch loss, because a lot of people, when they hear, hey, you lost $150,000, they may think to themselves as, oh my God, like you must have been robbed, you must live in LA or something must have happened. And the answer is no. Actually, I didn't lose the watch itself. I lost the value of $150,000 in the watch because the market went down. And it's a reality of how things happen. So let's go back for a second, because we've covered in multiple videos before the market sell-off, what's occurred, what's not occurring, and where values are going to stabilize versus others, right? But today we're going to take a look specifically at what occurred in this particular market. Why did my watch go down $150,000, and will it ever come back, or did I lose my money altogether? So last year, like the last 12 months alone, I made over $3 million trading watches. Now, it's a pretty hefty number for a guy that's actually not a jeweler or has a large jewelry store or anything like that, especially because I never carried anything more than like 3 to 4 million in inventory. So basically it was like a 100% ROI within a 12-month basis, which was pretty, exciting for me, because this was like kind of a part-time thing. This isn't my main business. And it's fun for me because I love watches, just like many of you. I actually enjoy wearing watches. I would wear a watch even if it was a depreciating liability, but thankfully for the world, it is an appreciating asset. But in this case, I screwed up. So we're going to talk about that specifically as to what happened. Now, the markets have sold off. There are some brands like Rolex that have come down significantly. Patek has come down significantly. RM and AP held stronger, but have also settled down due to the pressure of the sell-offs of other brands. So why is this occurring? In short, obviously no investment, regardless of what it is completely isolated or completely resistant to sell-off generically. So when you wipe off $1 trillion off the market in Bitcoin, and you wipe off another couple of billion off of the stock market on a day-to-day basis, well, you're running into a huge amount of liquidity issue in the market, where basically liquidity disappears. Now, while assets are really good hedges against inflation and counters to recessions, they are still not completely bulletproof to that kind of rampage, and to the fact that they do need liquidity to find a price index. So without liquidity in the market, the price indexes fall. So whenever liquidity falls at that rate, like that significant rate, then the price index will automatically fall no matter what. So it's not that the investment is worth less or that it was a bad bet. It's that you're in a condition where you just really aren't going to get people buying something. And when people aren't buying something, what ends up happening is there are people who need to sell. And those people who need to sell are going to sell significantly cheaper to make the car payments, to make their home payments. Maybe they didn't cash out on Bitcoin when they should have, and now they lost all their money, so they need cash to basically attend to their needs. And so as a result of that, they are now back to selling their stuff, even if it's not at market value, but rather significantly below that. Now, jewelers have been very, very effective and good at taking advantage of this in people, because once they see that obviously people can't afford it, then they just won't pay. Now, if you have very low liquidity and there's only 5 people in the room that are willing to write a check, then certainly that check is going to be a lot smaller than what people expected to for market value, right? Something that people haven't realized about the car market as well is that while the car market pricing isn't falling, because we really haven't seen any significant drops that are so big that they're driving the car market down, what we have seen is a slowdown again in liquidity. So therefore, dealers being forced to get rid of those huge, astronomical, stupid margins they had, and as a result, be stuck in a normal play, right? So the point I'm trying to make here that's just important to realize and understand is that when we think of the entire ecosystem of assets like exotic cars and watches, we have to understand that there's some little minor correlation to the fact that liquidity in the markets will drive pricing up and down, even if temporarily. So massive sell-off, low liquidity, pricing will come down. Now, historically, pricing has always gone up for two key reasons: because the cost of goods keeps going up, just like real estate, it's an actual good. And two, the demand keeps growing year after year, but the supply never rises. So since the supply is still super limited and the demand is still astronomical, even in times where liquidity is much lower, we are not forecasting watches no longer being investments or anything like that. Instead, we think that there's going to be a very good opportunity for the market to readjust and then slowly start to rise up again, perhaps not with the same amount of insanity, just like we've seen in exotic goods lately, for the watch market. So expect gradual updates, expect some watches to fall, others to kind of stabilize and then go up. We saw the stabilization of John Mayer's Platinum Daytonas, other very popular Daytona models that had gone down and now have come back up. We saw the slaughter of some Patek models that were incredibly overinflated, and those have adjusted down. And I think they overcorrected, and I think we're going to see a rise in those specific models like the 5980. I think we'll see a rise in that, and we'll see. But it is just reality that whenever a market collapses, it will take other markets with it. So this is how it works. But as far as my story, you see, like a week after I came back from my trip to Europe, which I may have documented here on YouTube, where you saw that I couldn't get any watches there. But after I came back, I actually decided I really wanted a 5990 1R. Now, not one to resell. Usually when you resell a watch, you have a good like 2-week standpoint where you know you're going to resell, so you have a margin. Markets don't really impact your margin because there isn't enough time for it to collapse or anything. So selling a watch, again, is very different than personally owning a watch, because you have to collect that knowing that are the values stable or not. And so for me, I really wanted a 5990 1R all rose gold. You've seen me wear it before. It's a yellow, it's a beautiful rose gold watch with the blue dial. Superb Patek, one of my favorites of all time, and I really wanted one. And I couldn't get one because during the hype where everything was going up, these were trading as high as 700. Dealers were offering 480, 470. And so it was really hard to find a good deal on one. So as a result, I said, you know what? I'm just, I can't find one, so I'm going to buy one, and I couldn't get one at MSRP or even close. So I decided, you know what? I'm going to buy one literally at wholesale, but wholesale at the time was like 480 grand. So long story short, I basically negotiated one down a little bit under 450. I was really excited because this was by far the lowest price 5990 1R found anywhere, and they were actually watches that were trading and showing listed in 700s, others in the 6s, and it just seemed to be really a good deal to be able to hold on to one of the prettiest and nicest Pateks ever made. So I said, you know what, screw it, I'm gonna buy it, etc. But recently, over the last couple of days, I took a look at the charts, and I was expecting the watch to have gone down from those $700 list to 700,000 listings to more than the 500K listings, as I saw in the first month as the market fell. But I was really secured in my dollar because the market was so much higher, and it was so good at that dollar I had gotten in. It was so hard to find anything else to replace it. Well, unfortunately, like I said, no market is basically bulletproof to what's happening, and the 5980 market, the watch right under that, started collapsing, started falling down from the 330s for a newer model all the way down to then the 200s, and then in the hundreds, it got kind of scary. It started rebounding recently, but it still made it to the 175K range before stabilizing between 180 and 200. And so that meant I saw it coming, and I was like, damn it, that means that the 5990 is basically gonna follow through and start falling too. And that's exactly what ended up happening. I basically came down and had to notice that the 5990 is now in the low 3s, and it's very likely that it's going to hit somewhere around the high 2s before it turns around and does anything. So the problem is, unfortunately, I'm not going to be getting my money back with from my 450K down to this low 300s. Still over $150,000, $130,000 in loss in just value. So it brings up the question, how can watches be good investments, and what am I going to do about it? Am I going to dump it, take my loss, or am I going to huddle, right? And reality is, I don't really believe in just hold things and figure out later when they come out. I rather believe in position and margin. So one of the ways you can basically offset yourself out of a watch is if you have the capital to actually double down. Double down means that, for example, if you bought a watch for 400,000 and another watch for 250,000 and you got a smoking deal, now the average of the two watches in hand is basically like somewhere in the threes. So you're able to buy your way down and your basis down by doubling down. This only works if you have the capacity to sell watches quickly and you've learned through Watch Trading Academy how to do that. If you haven't, don't forget that the description here in the video will allow you to learn how anyone with $1,000 access to a post office and a computer could also be trading watches. But for now, one of the things you have to understand is when you have a 400 or 500K watch and you have a 250K watch, you now have an average of 350K for a watch. Now, as long as the retail market allows that and you have a niche for knowing how to sell stuff, then you're going to be able to basically get out at retail on both counts. And the dollar made on unit B would basically cover the loss on unit A. So jewelers do this often. They realize that the market has crashed. They realize the market has come down. They get pretty annoyed and they start to quickly look for ways to do that. Now they do it at a significantly high rate because they're consistently selling. And I think that's the power of what they do, is the way they're able to do that. Gives them not only the funding to do it, but also have the client base to be able to do it quickly. Now, since you're probably watching this, you're not actually a jeweler, the only way you would be able to do this is, one, you have the capital to buy two of the same watches, and two, you have the ability to get rid of them. Now, it's not as hard as it sounds because the majority of Patek, Rolex, AP are watches that sell themselves, in the sense that people that know what they want are going after them. No random person is trying to pay me 400 grand for a Bubba, like random. They're either people that have trust or they're individuals who basically understand that there is a huge opportunity by buying by not only from people you trust, but also have the ease of doing a transaction with someone like that because they're wiring a couple of $100 grand, even though they really know what they want, so that you don't have to convince them that they want to watch and so on and so forth. But the point I'm trying to make here is that the only way you can basically double down is allowing the margin from a new watch you bought to offset the loss from the other watch, so you basically break even. So that is the way I'm going to basically get out of this, because I already have now two 5990 1Rs, one with a much lower price than the other, and so I am buying the dip in essence to offset any type of losses. I have two other watches that have taken some pretty significant losses. The rest of them have been pretty steady. In general, I'm still a big believer that watches are a great hedge against inflation and a great opportunity to counter recessions. Now, I will say that there's no way to be exactly down to a science accurate about the fact that nothing impacts the market, but I will say that it has still, despite its fall, outpaced Bitcoin, outpaced any type of loss in the stock market, and still done tremendously well as an asset class. So I don't want you to forget that and say, oh, I could lose money, but also this is thankfully the power of being rich, right? It doesn't matter. I mean, if you made $3 million, $10 million, $20 million, and you lost $5 million, well, in two of those cases, you're still incredibly positive. Well, there's a lot of people that are losing a lot of money each year versus you're still positive despite the big losses. So this is why it's so important to study up. This is why it's so important to work hard during the good times, so that you make sure during the bad times you can counter any type of negative effect something like this has on your business or on your way of living, right? Because there's a lot of jewelers out there and wannabe resellers and wholesalers who buy crap they can't afford. They're taking photos on Instagram stuff, but the reality is they're holding a watch they couldn't afford to pay for. So even though they're consigning it from a buddy or something, it's still not their watch. But this is very, very common in the industry and something you have to be careful not to fall victim of. So hopefully you learned something new today, and hopefully you can learn from my mistake and not position yourself for 150K loss. Again, please like, comment, subscribe, and tell me what was the biggest loss you've ever taken on a watch. I would love to hear your thoughts in the comments, and I will see you in the next video for Watch Trading Academy.